Happy Friday, Eric Bible with the Bible team at Neo Home Loans. What a great week for mortgage rates and ultimately our buyers and sellers. Finally, good news on the inflation front. I know very long overdue, but with that win, mortgage rates saw a nice relief. And simultaneously, we got some additional news this week on home price appreciation. So I want to break that down. First, mortgage rates, as we know, last week was a gut punch. We saw rates yet again break over 7%, really at one point just close to 7.25. Well, as of this morning, the 30-year fix is yet again with a solid 6 in front of it. We're talking 6.87 as of this morning, and the rally is continuing. So we're knocking on wood, and we're hoping that this momentum carries forward, given the signs that were exposed that inflation is finally cooling. And here, really what we saw on Wednesday through the Consumer Price Index report, CPI, headline inflation, which is the all-in inflation number markets were anticipating, a decline. They expected 3.1 from 4%, but it came in at 3%. And the most important one, core, which we hear and continue to hear, this 2% target, that is really what the Fed is focused on. And the component around core is that it removes food and energy, which the Fed's policies really can't control, as there's outside global factors that dictate price on those components. So really things that their monetary policy can control, which is a good gauge on domestic inflation. Market did expect moderation. We expected it to drop on the year over year number from 5.3 to 5. Well, it came in at 4.8. Still, yes, it is not the 2% target, but that much of a move inside a month. And really looking at this in relation to this time last year, we've seen some of the steepest declines in inflation ever recorded in history. So this was a large victory for the mortgage market. As I mentioned earlier on, mortgage rates rallied in an incredibly meaningful way, and we saw rates comfortably dip below 7%. Huge win for our buyers, our sellers, and the market overall. Now, question we keep getting asked, and we're hearing a lot of, what influence will this have on the rate hike that is expected later this month? And really looking at all the different dynamics, the labor market specifically, it is unlikely that we'll see the Fed not hike later this month. But it is firmly expected that another 0.25% hike is in play, despite it not looking to be the best decision. But given the fact that the labor market is still strong, there's a strong case that the Fed is likely to hike again later this month. Now, what impact will that have on mortgages? Yes, in the short term, it could kind of reverse some of the wins, but ultimately, the more that they hike rates and the more likely that we enter recession. The textbook and technicals indicate that as far as we correct and move up is more opportunity to the downside. So yet again, long-term expectations are rates will equalize and eventually come down, as we've already started to see with inflation. So big win this week. We'll take the victories as we get them. And in turn, our buyers and sellers can reap in those benefits as well. Another key piece of data that was released this week was Case-Shiller and CoreLogic's home price appreciation, and really looked at as some of the gold standards for home price appreciation. This data came out for the month of May, third consecutive month of home price increases, 0.9% on the national level, which brings it again to a third consecutive month of home price appreciation. Keep in mind, this is on the backs of 25-year high on mortgage interest rates. The collective narrative was home prices would crash at rates that level. Well, it's done the exact opposite. And now we are touching and in some areas exceeding all-time highs on home values. And if we were to annualize the appreciation we've experienced this year, we could see a 10% gain in values towards the end of the year. Now, there's obviously a lot more year at play, so there's a lot of things that can happen, with the volatility and interest rates that could play a factor in it. But all the naysayers that were out there, all the clients, borrowers, sellers, you name it, that we've been speaking with, that, hey, we're going to wait for prices to cool off. Well, it doesn't look like that's happening. And really, this just continues to really solidify the argument that waiting is only going to get more painful. As mortgage interest rates come down, and it's looking like the case is set that rates should be in a position to decline further. With inventory levels where they're at, what's going to happen to home prices? So yes, okay, you get a lower interest rate, but the competition jacks up, and in turn the price jacks up. And if demand is this strong with rates that were in the high sixes, low sevens, prices still appreciated. What happens when rates get low sixes, high fives, or low fives? You name it. You're going to continue to see massive price pressure due to the fact that inventory is so low. Additionally, we've included the results of the national survey had you all take last week. This data is throughout the United States, so it's a real lifetime indication of what we're seeing. And again, knowing that appreciation numbers were up, we're seeing solid activity throughout the United States in the West, where, yes, we were hit the hardest here in San Diego specifically, Southern California. We're rebounding at a very, very strong rate. And we're seeing it day to day, multiple offers, home selling above ask, buyers having to remove contingencies and act quickly. So, I believe the worst is behind us, specifically in housing. And really now the biggest concern is centered around inventory, and hoping that we maintain this momentum downward in mortgage interest rates. As always, we're here to support you. If there are questions, scenarios, you name it, we're here. Feel free to reach out at any point. Make it a great day and a great weekend. Thank you.